It's a really lonely place as a CEO of a tech startup, really CEO of any business. I'm sure you realize that, right?
Mm-hmm.
So we try to put, our founders in a place where they, I want to be the first phone call when the shit hits the fan. On a monthly basis, we are probably talking to more than one of our founders, giving them advice because they're asking us questions, right?
Mm-hmm.
But I don't think I would be where I am today had I not had those corporate experiences. It helped to shape me and understand, look, risk management is good. It's great, right? And it's required. And you have to understand how to balance that. And, and I'm fortunate enough now to do it in a way where I get to help other entrepreneurs do it and help them achieve upside and help our firm and our LPs get some benefit out of it.
Welcome to Forging the Future, and I'm sitting down today with Heath Butler, partner at Mercury Fund. Hey, Heath.
Hi, I'm glad to be here.
I'm glad to have you. So, venture in Houston, I think a topic that we both know and love.
Yes.
Let's talk a little bit about where you saw Houston and venture when you first started.
It's interesting. I was an executive at Insperity. And I knew Blair and Dan and a lot of other people in the community. And as part of that experience and running corporate development for them, I got the sense that something was changing and something was happening. Sure enough, the station Houston got started over on West Gray. And, we used to pile into that tiny place where Surge started. And then eventually JR had the big bright idea to make it bigger and better. And we moved to downtown. Interesting story about that is I was one of the original investors in Station Houston, and then it got converted to a nonprofit. So my investment ended up being a donation. But it was all for
your ecosystem donation.
Absolutely, yeah, the ecosystem donation. It was all worthy because Rice, took that over and now that's the Ion. So it's pretty exciting. But, over the years, I think it's gotten better. COVID, helped a lot. But, Mercury started looking at all of the secondary, tertiary cities where the coastal investors weren't, realizing that, these cities had to innovate. These cities had to create, more innovative jobs, not necessarily tech jobs, but the cities just needed to innovate to survive.
So in this environment, I mean, what would you tell a startup that's trying to raise money?
The thing they can focus on the most is growth and discipline on their burn, right? Really analyze every spending decision and where you are burning capital, and make sure it's focused on things that give the business leverage. I think a lot of CEOs are moving from wartime to thinking about growth opportunities. And I think over the last couple of years, you really needed to control the burn, and there was an acceptable level of lack of growth because it was a tough environment. And now I think venture firms are really looking for those standout opportunities. So you've got to figure out a way to drive growth in a leveraged way and continue to manage your burn. And I think those companies tend to stand out, and VCs are willing to lean in and give them an opportunity. So, that's the biggest thing I think that companies can focus on right now.
Well, what are some of those metrics? I mean, when you're evaluating a startup and trying to determine whether it's good or great, what's a great startup from your point of view?
Well, of course, the three things that you always hear, a big market, and a really, sort of talented team, right? And of course, a product that has strong demand, right? The thing that's underneath the hood on that is, okay, well, how many people are buying it, on whatever the frequency might be, and ultimately looking at growth. And when you think about growth, it's not just the initial buy, but it's the renewal, right? So then it becomes, what's the net dollar retention, and is that expanding? So that, are you able to then sell those customers something else? And then, of course, at what margin, right? The initial margin and the renewal margin, and what's the margin over time? Those are probably your three biggest metrics, right? Growth, margin, and net retention. From there, we want to really understand, how are you burning capital, and in what way? So then you've got all of your ratios you look at across, engineering compared to growth, sales and marketing compared to growth, and ultimately, what's that net burn, right? So all of the ways spending is happening, we're kind of looking at that space, and then you start to get to the metrics that we see them as more as qualitative, right? Well, how good is the team? I just did a LinkedIn post a couple of days ago on the state of the tech recruiting. And one of the things we're seeing is, CEOs want people who have the depth and breadth of being able to think strategically, but be able to execute. If you are one of those executives where you can think strategically, but you tell the CEO when you get the job that you need to build out a team to execute that, you might not get the job, right? Mm-hmm. And so we want to really do an analysis on how dynamic is the leadership team. Can they roll their sleeves up and get their hands dirty and actually build the infrastructure that's required to scale a business? Or are they a CEO who knows how to do it, but has decided that they're at a point in their career where they don't want to do that? And mindset wise, they don't want to do that. And you're not going to be able to convince them to enjoy it, right? Mm-hmm. And if they do come and do it, they won't be there long. So we really try to help our entrepreneurs understand how to evaluate talent. And we look at the existing talent and then try to understand if they're coachable enough to leverage all the scar tissue we have, mm-hmm. To build a great business. So that's a little bit of a peek of some of the metrics and how we think about it.
How do you evaluate a founding team's long-term potential?
It's really tough. It's really tough. And I'd love to tell you we've got a 90% batting average. But the reality is, we only need 30% to get in the Hall of Fame, right? Mm-hmm. So, but on a more serious note, I think our ability to understand what they've achieved before. So you could be a first-time entrepreneur, but some of the experiences you've had yield the ability to be coachable and understand some of the dynamics that are going to come at you as a founder, because it's a really lonely place as a CEO of a tech startup, really CEO of any business. I'm sure you realize that, right? Mm-hmm. It's a lonely place where sometimes it's you can't talk to your leadership team, and you feel like you can't talk to your investors. We try to put our founders in a place where they, I want to be the first phone call when the shit hits the fan. Mm-hmm. So it's really important that you build those relationships with the founder, and we try to do that so that we can help them evaluate the team when the time comes. But I would say on a monthly basis, we are probably talking to more than one of our founders about their leadership team and giving them feedback or giving them advice, because they're asking us questions, right? Mm-hmm. The way you primarily assess it is to evaluate, previous experiences, and you look at what type of investments are being made at the current time to try to evaluate based on pattern recognition and things we've seen. Hey, is this an outlier where we should double down and invest in this person? Or do we feel like this person maybe has reached their, maximum level at this point in their journey of how they're investing in themselves, right? Because I would never want to limit anyone, but it's just a constant investment. And you see sometimes people don't continue to invest in themselves so they can continue to uplift their abilities and capabilities to take them further.
Is it difficult for like someone who's been in corporate, for quite a long time to take that red pill to become a startup CEO? Do you see people doing that here in Houston? Because that's been partly a criticism in that people get into the large corporations and the Exxons and BPs of the world, and they get very comfortable there and they're making good salaries and they just don't really want to take that leap into entrepreneurship. But then the other issue there is once they do take that leap, they're used to having the whole resources of Chevron behind them and having staff and people and whatever, and they realize that they have to do a lot of the work themselves when they move to a startup. What kind of founder are you seeing in Houston?
I think the winners who were in corporate realized that they weren't made for corporate, as opposed to the corporate executives that make the switch, and it's all about sort of risk management and your philosophical mindset on the life you want to live, if you will, which has nothing to do with money or any kind of monetary benefits. It's all about, I think, the curiosity to solve a problem and solve a big problem and make the world a better place and do better for yourself and your family in the process. And I think the people that recognize big problems and they have the risk appetite to tackle it, and they do what I call falling in love with the problem. And it's absolutely, they want the end benefits that come with it, of being financially successful, but they're really driven by the personal satisfaction of being a part of the journey and solving the problem and helping a customer end up in a better place. And I just think that that's a philosophical difference. And I think those people realize they shouldn't be in corporate. They leverage all of the things they learned and then they leave. And the main reason I say that is because that's what I would say was my journey, right? I could attest to that.
When you took the red pill?
Look, I tried to leave several times, and there were great opportunities that caused me to stay, and but ultimately, the conservative nature of corporate America, it had its time. But I don't think I would be where I am today had I not had those corporate experiences, because it helped to shape me and understand, look, risk management is good. It's great, right? And it's required. And you have to understand how to balance that. And, and I'm fortunate enough now to do it in a way where I get to help other entrepreneurs do it and help them achieve upside and help our firm and our LPs get some benefit out of it.
What would be some of those traits? I mean, if I'm sitting at a job at BP or Exxon and I'm listening to this, how do I know I'm in the wrong place and that I should be actually heading up a startup?
That's it's interesting. I bet it's a lot different for a lot of people. But the things we see most often is just the curiosity. One of our core values at Mercury, and one of the things we actually look for in entrepreneurs, is just that intellectual curiosity, right? And that they're always asking, why. They're always pushing the limit, pushing the envelope on what could be, and have we thought of this? And they're always asking the questions that annoy the project manager or the person that's actually just trying to get their day done and go home to their dog and just relax, right? And so you kind of know that might be one of those people by the unrelenting stirring of the pot, right? And I would say I was that person during my corporate career. But I think that's one of the main traits that you probably see. I think the next one is the entrepreneurial passion. They're always on the hunt to sort of see an opportunity in something. And that opportunity might show up as a business, but they're always seeing opportunity and of what the possibilities could be. And I think that's a main trait. And I think one of the other ones that you have in a lot of founders we see is just the self-starter nature of initiative, right? They know how to get things done. They know how to cut through the BS. And when you start to combine those three things as a foundation, usually you end up with an entrepreneur.
Mm-hmm. Well, it's also that where you see a problem and you don't just complain about the problem. Right. You're like, how do I fix this problem? Right. How do I address this?
You're not just problem oriented. You're solution oriented, and that's that self starter nature, right?
And I would also add constant learning. I think if you come across someone who is actually continuing.
Yep.
I remember when I was getting my pilot license, the instructor when we did ground school, it's one of the first things you do, right? Because they don't just pop you in a plane usually. Right. But it's like, well, a lot of people struggle with ground school because they haven't opened a book since high school or college, and I'm like, well, no, that's not my problem, right? So, but for many people, they did stop after school, right? And I think entrepreneurs have that, like you said, you put it as curiosity. They're looking to learn and looking to solve. They're looking to question why.
When I do the how to start a startup session at the Ion, one of the key things I say is required is falling in love with the problem. And I think you do that continuous learning when you really fall in love with the problem and you're constantly looking for ways to make the problem completely go away or lessen the problem and just make life better for the person with the problem. And if you fall in love with trying to solve that problem, you're always learning. You're always looking for ways. And you're trying to figure out, will this apply? Would that apply? And I think that self-starter nature of that helps you with, always be a learner, and if you can fall in love with that problem that you're trying to solve, that usually could drive that intellectual curiosity. And so, usually when those people are in corporate, they end up not being there too long, or they keep getting promoted and they have a very successful career and figure out a way to manage it through. But there's some people I think can make the switch, but not often.
Do Houston investors, are they interested in technology per se? Because we do get criticized for a lot of family offices, a lot of high net worth individuals. They're very comfortable and used to oil and gas and energy and retail. But Mercury also has focused a lot on software, right?
Yep.
And your LPs, you see, obviously they're interested in software.
Yeah, look, we most of our LPs are institutional grade, but we have a number of family offices and wealth managers that manage some of the alternative assets for family offices, and then we have a bunch of high net worths, and especially here in Houston, we had our annual meeting last month. And, it was a packed house, and most of those outside of our larger institutionals and some family offices, most of the people there were high net worths. And so I think there is a level of interest. I think that going back to one of your earlier points about, hey, why didn't we have Venture Houston, or what's going on with the Houston ecosystem? I think we still haven't quite figured out how to crack the code on building the density that's required for some of the high net worths to feel comfortable that there's it's really a thing. And I think you find that most of the Houston investors, that aren't at the events and don't come out, I think they know it's out there, and I think they are looking at how they can get involved through wealth managers and some of the other vehicles that might give them some exposure to alternatives. They just aren't becoming angel investors and all. And I think until we really figure out a way to build a cohesive, collaborative ecosystem with the density that can help them feel a little more comfortable, we might still feel like, or it might look like they're not as involved as they could be. So we still got a little bit of work to do in that area.
Yeah, education, right?
Mm-hmm.
And then how to do it, how to get involved. I just see companies like Unpack, right? Back in the day, back in the 80s, right? They were first company to hit 100 million, first company to hit 5 billion in 5 years, or fastest company, right? And there's always, from my perspective, been a lot of tech in Texas and with TI and Dell and et cetera. But, there's still some hesitancy for some reason to invest in in that specific space. But you're starting to see companies like Cart.com or Intuitive Machines in the space area, which did go public. And I'm sure Cart.com will get there as well. So there's great opportunity there to, invest in that asset class, right? Or at least diversify into it.
There is, another area I think that you'll start to see it, and it sort of escapes venture, is this notion of, entrepreneurship through acquisition, where, we're in an age where, we'll probably have one of the biggest, if not the biggest, transition of wealth, from baby boomer business owners, where a lot of them realize that either their kids or offspring or family either isn't capable or isn't interested in managing that business. And I think some of those businesses are tech-enabled service-related businesses. Some of those businesses are technology-related businesses or specific technology businesses. And I think you'll see some 21st century reboots of some of those businesses where new technology could be applied and grown. And I definitely see maybe some, if I were to call them old school investors who haven't quite adopted the cutting edge tech. I definitely see them maybe getting involved in those businesses because it's ongoing concerns. You don't have the risk associated with a startup, but yet you might be able to apply a lot of the 21st century attributes to reigniting the growth engine in those businesses with the right leadership. And I think Houston could be primed to take advantage of investing in those businesses. So that is again, that's outside the scope of Mercury, but from a my personal interest of seeing things kind of happen here in Houston and things I would bet on could be possible. That swim lane is one of them where I think you'll see it emerging over the next 3 to 5 years.
So Heath, how are you forging the future in venture?
Being at Mercury, the things I think about as we talk and look at opportunities, obviously, machine learning and AI and everything happening in that space is really big. And we start to think about not just large language models, but small language models, right? That where applications are being built on top of, the infrastructure that the West Coast is investing in. And we think in the middle of the country, especially the types of firms we look for, we are looking for those unique vertical-based opportunities where small language models, on top of a huge and valuable data set will be an opportunity, and we're looking at those. We think space is a emerging area, right? The software related to what will happen in the continued development of space. And that's really interesting. And then with Houston's unique positions in healthcare and energy, we continue to kind of be open to make sure we understand what's happening right here in our backyard. And so we look at those things as it relates to unique opportunities that might be a fit for us, although we don't focus on energy or healthcare, as a primary area. And then I would say overall software is changing. You're seeing a lot of content around Saas changing. We're seeing it. And one of the big areas that you're seeing is companies moving from, paying for access to software to paying for usage or work done using the software, right? Usage-based pricing, things like that. So we're starting to see changes happen where it's not just business models focused around SaaS. The business models are getting multi-dimensional and multi-layered, and it's really changing how you think about valuing businesses and how you think about investing in those businesses. So we are trying to continue to keep our intellectual curiosity at a high level and our entrepreneurial passion real deep, and do everything we can to partner with the best founders we can find to bring great returns to our LPs. So and hopefully that includes forging a bright future for Houston.
Well, Heath, this has been super interesting. I'm sure we can talk about this for another couple of hours.
I'm sure we can.
I think we do need to get together on solving that Venture Houston problem.
Yes, absolutely. Mercury's always here to be a part of being collaborative and being supportive.
Absolutely. And I've got my money socks on, and I think you could always use some more.
All right. I like these. I'm a big sock guy, so I will be wearing these next week. Thank you, Chris. Sure. This is awesome.
Well, thanks for coming on the show. Definitely.
Thank you.
At SoftTech, we don't just follow the trends, we set them. As the founder and CEO, I've built a team that excels in delivering cutting-edge solutions in software, hardware, and IoT. From concept to completion, we're the partner that turns your tech dreams into reality. SoftTech, where innovation starts.